If you haven't noticed, the economy is cratering. They just came out with negative GDP, warnings of food crisis, labor shortage. So the economy is cratering. What's next? How can you prepare yourself for that? First of all, pardon the empty room. We're in the very last stages of moving. So if you're staring at a blank room, wondering what's going on, that's what's going on. So I want to welcome you to today's video. This channel is dedicated to not just giving you the bad news, but the best ways you can prepare yourself. So that's what we're going to be talking about today and making sense of what's happening. My guest today is Steve Penny. He's the creator of the Silver Chartist newsletter. It's the best free newsletter out there for gold, silver, mining stocks, and the best ways to profit from this massive wealth transfer that is underway right now. I'm a paying member myself. There's an awesome free one. I highly recommend you check it out in the description and pinned to the comments right there down below. We'll give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being our sponsor. And we want to thank you for listening. If you enjoyed today's video, make sure you hit the like button, subscribe, bell notification is what notifies you for new videos. A lot of people saying they aren't getting notified. Just double check you hit the bell notification. And if you enjoy it, you can give us a good old comment down below. Let us know what you think. So, Steve, good to see you.
You too, Jake. Always good to connect with you and look forward to a good conversation.
I thought it was hilarious that they announced negative GDP and the stock market took off.
Yeah, nothing makes sense these days. It's like bizarro land where, whatever is logical, the opposite happens. But, obviously, the market is starting to look forward to future Fed easing again. And that's why, the stock market went up. Bad news is good news in this backwards world sometimes.
Yeah, bad news is good news. The worse the economic news gets, it just means more money printing, which means more inflation of assets while the economy continues to crater. And one of the interesting things about it that I love to discuss is the absolute versus relative strength of the dollar. The dollar is very strong on a relative basis with other currencies right now. And it's easy to therefore assume, if you just look at that everything's fine. And I was wondering if you could talk a little bit about that in the absolute versus the relative strength of the dollar.
Yeah, this is a great question. I'm glad you asked. This is very important for every single person to understand. When you look at the dollar index, what you're looking at is the dollar relative to a basket of 6 other debt-based fiat currencies. So there's a basket of 6 currencies. It's measured that basket is most heavily weighted towards the euro. You got the Japanese yen in there, the British pound. And if you've got 6 currencies that are all falling and losing purchasing power, but the dollar just happens to be losing purchasing power at a slower rate, it gives the perception of relative strength, but it's still losing purchasing power. It's being debased. It's just you're measuring it against other falling debt-based fiat currencies. When you measure it against hard assets, the dollar is losing purchasing power and it's going down. So I think about the dollar index as like a headwind or a tailwind. The metals and commodities can rally in unison with a rising dollar, just like they have there was a period for the last couple months. It just means you've got a headwind. So it's not like there's a perfect inverse correlation between the dollar and metals and commodities.
There's a term called psychological operation, a PSYOP, and it's basically when an entity does something to mentally confuse the masses. And one of the greatest PSYOPs is the relative strength of the dollar, because you look at it and you think, oh, okay, I guess everything seems to generally be fine. Meanwhile, you're watching your purchasing power evaporate like quicksand. And then when you combine that with negative GDP in the scenario that we find ourselves in, I wonder what's next in an environment like this. Where do we go from here?
Well, the volatility we've seen in the last few months, I think, is only going to be amplified in both directions across all markets. So prepare for volatility. But, the overall macro trends are going to be inflationary with quick deflationary impulses along the way. So we have to be prepared for that. There's going to be sharp pullbacks. But the overall trend is towards inflation. And I think the smart thing to do is position yourself in things that will benefit from that inflation, because inflation transfers wealth from people who have paper assets to those with hard tangible assets. And silver, uranium, gold, platinum, battery metals, things like that are stand to benefit the most in the coming years in this kind of environment, as long as you can stomach that volatility.
Whether it's the COVID, whether it's Ukraine and Russia, whether it's a food crisis, whether it's the change in the environment, it seems that we move from one crisis to another, but each crisis is just an opportunity to print more money. What happens in an environment like this for gold and silver? Where do commodities go from here?
Well, if the last several thousand years of human history are any guide, silver and gold are the prime beneficiaries of this exact environment. It's volatile. The majority of the move tends to happen in the last portion of the time, and that frustrates a lot of people. If you go back to the 1970s bull market in metals, where it was highly inflationary, very similar environment that we have now, stagflation, slow economic growth, a lot of inflation. The metals did really well in that decade, but there was a couple-year period where silver actually fell by 50%. I think it was 1978, before rallying, several 100% in a period of, just a handful of months. So the vast majority of the move comes at the end of the time, and that requires conviction in the fundamental thesis. I use technicals to tell me when to buy and sell, but really it's that the fundamentals that tell me what to buy. And I think without having a firm grasp of the fundamentals, it can be easy to be shaken loose. Unfortunately, it's the retail investor who usually sells at the exact wrong time. And the bottom line is the Fed is trapped. Other central banks are trapped. There's no solution to these problems. They're going to have to revert back to more money printing on steroids like we haven't seen before. Each stimulus package has to be bigger and bigger and bigger than the previous one in order to kick this can down the road, unless they want to have implosion of the economy sooner, and they don't want that to happen on their watch. They just want to kick the can down the road, so the blame falls on someone else.
The implosion of the economy seems inevitable at this point. There was a tweet by Frank Giustra, one of the billionaire famous commodities and gold investors, and he said he was surprised that he hadn't seen gold and silver move, and he felt like there was some type of price manipulation going on in preparation of a great currency reset. You said the Fed is trapped. When I'm looking at this and they say, we're going to raise rates, we're going to raise rates, we're going to raise rates. And we know that in essence, this is a bluff because the rates need to raise to the rate of inflation to have any impact at all. And we've raised 0.25%, and the market's freaking out. And so I wonder if they need to reverse course, especially when you have food crisis on the horizon. They say they want to print $150 trillion to solve climate over the next 30 years. When you're talking about that amount of money printing, when we're already in an environment where inflation is so bad, then you couple that with a food crisis. For a while, they were saying inflation was only bad because of supply chain disruptions, and it would get better. But now I'm sure you've seen the maps of outside of Shanghai of all the ships trying to get in. So you see this massive new building of a serious supply chain crisis. Every single one of these government officials is now admitting there's a food crisis coming. Then you couple that with already incredible inflation and already incredible levels of money printing. I just wonder, where do they go from here? And do you think we're closer to a currency reset now? And what do you feel about Frank Giustra saying that he felt one was on the horizon?
Yep. A couple things about there. You mentioned the manipulation. And one thing I track every single week very closely is the commitment of traders report. That's where you can tell how the big banks are positioned. And not surprisingly, they were positioned for this pullback in metals. They were heavily short gold and silver. And then what happens is as price pulls back, they cover their shorts. And once it's a wash, rinse, repeat cycle. And, the encouraging thing is we're getting closer to a spot where is typically coincident with lows in the metals. So I don't think we've got much further to the downside to go. But as far as a currency reset, yeah, the natural order of things, if this were to play out to its natural conclusion, would be for a complete collapse of the currency. That's where this would happen. But I think you and I would agree that they're probably going to roll out some kind of new system beforehand. before it goes to zero. They're probably not just going to sit there and watch the dollar go to zero. And that's probably going to involve central bank digital currencies, loss of our, freedoms and liberties and all those kind of things. They're going to do that. The question is, how successful will they be, and who are going to be the winners and losers? I call it every 40 years or so, the rules of the game change. And I think the global monetary system, the rules are about to change. Whether it's in the next few months or a couple of years, I don't know. I think it's sooner rather than later. But the rules of the game are going to change. They've got a plan, and probably your average retail person they don't have their best interest in heart. Put it that way.
You said that the rules of the game are going to change soon. What are some of the other leading indicators that we're getting to that point? You had mentioned bond yields. What are some of the main signs that we're entering that territory?
Yeah, I think about it. It's just a math problem of the furthest this could possibly go, and it can't even go that far, is we're approaching a point where the interest on the debt, consumes 100% of federal tax receipts. So if all of our tax dollars go to paying interest on the debt, obviously that's unsustainable, or something has to break before we get to that point. And the big variable in that equation is interest rates. And interest rates have spiked the 10-year was down at 0.4%, which was crazy in March of 2020. It's since rallied to right around 3%. That's up, several fold in just a couple short years. And this is a historic rally in bonds, in yields. And the government, our economy just can't handle those kind of interest rates. I mean, every 1% rise in interest rates adds about $300 billion of interest payments for the federal government to have to pay that they've put into their budget. And who's going to buy these bonds? Who's going to finance our deficits? If China's stepping back, Saudi Arabia is stepping back, and the Fed is stepping back, they can't allow interest rates to rise, and that's what's going to happen unless the Fed reverses course, reverts back to money printing, which they're going to do at some point. It's just a matter of when.
What do you think is the thing that needs to occur for when they reverse course? Since they started this, I felt like it was just a head fake. They've kind of dug their feet into the sand here. What needs to occur for them to do that? Is it people complaining? Is it getting closer to the midterm elections? Is it seeing a more significant stock market crash? We know that this rise in interest rates, it's not going to bring inflation down. And so I wonder, what do you think they're looking at?
Yeah, so central planners, their objectives are they want stocks to go up, they want housing to go up, they want everything to go up, but they don't necessarily want it to go parabolic. They want to kind of control it. So I think this is them letting some air out of the tire a little bit. And it also gives the impression that, hey, look, we're doing something. We're not impotent. We've got tools. We're in control. So I think they reverse course when the people beg for it. You get a 20% pullback in the stock market, and we've already pulled back, pretty sharply. You get another 10, 15% pullback. All the people who were Fed critics on CNBC, inflation's running hot, they need to do something. Those same people are going to be they're going to be begging for it. Give us more money printing. And they're going to demand it. And the Fed will acquiesce like they always do. And they'll look like the heroes to a lot of the population anyway.
So a lot to be watching and a lot to be keeping an eye on. One of the ways that I personally am preparing myself and have prepared myself since the original COVID sell-offs of the stock market in March 2020 is with mining stocks, commodities, and metals. You run the Silver Chartist newsletter. So give us an idea of what's going on there and why someone should check out the free newsletter.
Sure. And we're just moving over to a new members area. We've got a mobile app that complements the website. So there's really a lot of things going on. A lot of value is being added. And we still have the price very low for that premium membership. And you do get real-time alerts. It's a fully transparent, over-the-shoulder service. With real-time alerts, I show members exactly what I'm doing in my longer-term portfolio. Anytime I buy or sell, you get mining stock analysis from Jeff Clark, who's one of the best in the business. We've also got David Brady on the team, who I think is one of the best out there, putting all the pieces together and helping to forecast what's going to happen in the markets next. So there's a lot going on over there. Great community of like-minded people. We're there to encourage each other. as we pursue our goals. And the best thing, it's not on Twitter. It's not on any of these third-party social media outlets. It's on our own kind of app, social media. So we're not controlled by any third party, and we could say what we want.
So be sure to check out the Silver Chartist newsletter. I'll link it in the description and pin to the comments right there down below. What do you think of today's video? What do you think's coming next? Where do you think that we're headed in the economy? What will the Fed do? I'd love to know. Give me a comment right there down below. Let me know your thoughts. If you enjoyed today's episode, make sure you hit the like button on this video, subscribe, bell notification to get notified for new episodes. I want to thank Steve for coming on, and we will see you next time.